Hello there, traders. Welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm here to bring you the latest information and the latest data that's going on in the Forex markets, as well as some key charts of interest. So let's kick it off straight away. We're going to be talking a little bit about what's been happening in the markets. And yesterday was a huge day for the US dollar. We saw a lot of US dollar weakness coming through, and that was mainly because of the non-farm payroll reports, which we'll touch on the report in a little bit. But what is happening across markets? Now, one market we did like the look of for going long was the pound against the US dollar. Now, I didn't get long, and that's my light falling over. 1 second. Oh, and it's going again. Let's just leave that there. I didn't get long, but we can see that the market has rallied significantly. Now, the reason why we wanted to be pound long, because there was an extreme positioning forming on the commitment of trader reports. And as well, if we look at this weekly chart, we can see that the price is kind of trading between this sort of 131.50 handle and this kind of 137.11. And we came down all the way into this weekly area of support, where we can see that price has been bouncing from on multiple occasions. So every time we've kind of come into and around this kind of 131.50, 131.100 area, we can see the market has reacted. And last week we had a sort of just a candle that stalled and closed back within the previous week's low. So that was kind of a sign that we're at a strong level of support and that sellers are potentially getting out of that move there. What we've seen since is the market rally back to the upside. Now, is this going to be a sustained move, or is this just going to be a move that is going to come back down and retest these lows? I think it could be potentially sustained. I think we could stay within this potential range that's building, and we could see a move back up into the 137s. Now, the reason being behind that, obviously, for one, is the commitment of trader reports. If we go take a look at what's happening here on the commitment of trader reports, we can see that there's a very strong buy signal coming from the commercials and a really strong sell extreme coming from the hedge funds. So I want to be trying to take advantage of that move. So if we do see any kind of reversals coming into the market, then we have a good chance of trying to catch that. So what we have here is the pound futures weekly chart, which is just exactly the same as just showing you here on MetaTrader. And what you can see is the fact that we are, in that trading range on the pound futures as well. So what else do we have? We have this com index, which basically gives us the signal, right? Which basically tells us that contracts are at the highest levels they've been for 36 months. Okay, so that's just what that means. And then what we have here is a breakdown of the long versus short contracts, as well as the net change. Okay, so we don't necessarily always look at the long versus shorts, but sometimes it's nice to know why net contracts have increased, let's say. So, they can increase because of two things, well, essentially four things. Is it because the long contracts are getting more bullish? Or is it because, long contracts have dipped, but short contracts have dipped as well at a more aggressive rate? Is it because short contracts have increased, but longs have also increased at an aggressive rate? So it's good to know what's happening under the surface. A lot of the times they work in tandem, but sometimes you can get kind of like a disparity between it. So, for instance, if you take a look at the non-comp situation down here, the non-comp positions, which is basically our hedge funds, our smart money, they are increasing their short contracts on the pound aggressively, right? Decreasing those long contracts. So that's a good thing. That means that they are aggressively getting short on the pound. And you can see that reflected in the net contracts. So you have a little look at the net contracts here. They are currently minus 105,719 contracts. And we can see the last time that we really were in that similar sort of area was back here in 2019, right? So you can see here we have this nice little sort of bump up in contracts there. And what happened to the price was, and this is a weekly chart, remember, so over the next few weeks, so from sort of August 2019 to the end of 2019, so what's that? That's like another 4 months of price action. The price pretty much went up Okay, and then it came up into a nice weekly level of resistance, bounced back from that. So this is what I'm looking for to happen again, essentially, with the pound, right? We've got an extreme short position from the hedge funds. We've got an extreme long position from the commercials, who are naturally hedgers in the markets. And what I'm looking at is the fact that they are now at levels we haven't seen for a very, very long time, right? So looking for a potential pound bounce here back up into these weekly highs. So in terms of like how we trade that now, it's just looking for that kind of confirmation. So price has kind of found support, bounced up, and come up into kind of an area, a pocket of resistance, right? You can see that there's volume in this area here because buyers and sellers have been agreeing on price between those two levels. So that's where volume accumulates on the chart, right? What happened then was sellers won, buyers left, sellers won. They took over and they pushed price down into that level of support. What happens here? Sellers leave, buyers take over, and price moves back up. So now we're kind of testing this high volume area in here. So what I need to see really is for price to kind of come back into this zone, come back in, reject the lows of the zone. So how does that look? I'm looking at these lows in particular. Okay, so anything in and around this area. So around about the 133. I'm going to just round that down to the 133 handle. And we'll just put a little label on it. $133. This is why I hate MT4. This zone in here is what I'm going to be looking for. If we can kind of come back into this zone, retest on the other side, and kind of fail here, I'm going to be looking to go long on the pound US dollar. I'm going to look to try and buy it back up into these kind of weekly highs, back up into the 136 and above, which gives us a nice sort of return on our, reward to risk ratio, right? So I'm looking to see, can we get back into that level? Now, how will that look in terms of just trend? We can see the 4 hour at the moment is starting to find a bit of a sort of double top pattern in here. So if the 4 hour starts to kind of make new lower lows, lower highs, that's great. I'm going to be watching these lows, because if the market kind of fails to make a new lower low, that's where I want to be potentially buying into the market. So that's what I'm going to look for here on pound. Looking to see if we can get a bit of a pullback and a continuation to the upside. If I just bring back markets made clear here and go up to the dashboard, we'll have a little look at the seasonality as well, because I want to see how the market is, trading in terms of pound futures. So the British pound sterling. Okay, look, so we've got the 20-year on, which has a minus 10% correlation. So we don't really want to bother with that one. We'll bring on the all years, because current price action has a 78% correlation with all years. Look at that. July usually is a low for pound, and we can see a rally up to the end of August. So this is a real strong correlation between the fact that we've got weekly chart price action showing us in a trading range. We've got an extreme positioning from the commercials and the hedge funds, and we also have seasonal analysis to back this up. So we can also kind of bring in another element. We can look at the currency strength meter, right? And the currency strength meter is telling me that the pound is also strong. So it's at +5. So it's already on our watch list for the past couple of weeks to be a buyer. So if we look down at our table here, we can see that pound Aussie longs, pound Kiwi long, pound Swiss longs. If we come take a look at our historical strength table here, and we just have a little look at what's going on with the pound, we can see that over the past couple of weeks, we have started to see that strength come in. It was coming in as well at the end of the previous month as well. So really speaking, pound longs have been on the table for a little while, especially against those weaker currencies. So, for instance, it's telling us to be a buyer of pound against the Australian dollar, and that's because the Australian dollar has been weak. It's kind of been hovering at the lows of this table for some time now. So, pound Aussie still on the cards for a potential long position. We've talked about that previously as well, so I'm looking to essentially continue to get long on that. Okay, so let's move on to the next subject. So our next subject is looking at sort of what the big story was in the market, and obviously, the most obvious was the NFP, right? So we talked about this yesterday. We put our predictions in the video yesterday. I said anything around 100K I expected. I didn't quite expect to see 57K, and I did not expect to see any revisions lower. But that is exactly what we had. NFP came out at 57K, way below forecast, but also below the previous. And the previous was revised down from 172,000 down to 129,000. So that's why we saw the US dollar sell off aggressively yesterday. And that was largely down to the fact that because this has come in lower, it suggests that the jobs that are being created in the US has fallen, right? So 57K, not a good number for the US. Average hourly earnings remain the same, which is fine. And unemployment rate was 4.2%. So very interesting data at the moment coming out of the US. The US is a strong currency, but still, dollar really sold off yesterday. If we take a look at US dollar Swiss, for instance, which has been fairly in an upward trend yesterday for the most of the few weeks, market has just been pushing lower. We're breaking through these areas here, broke out of this nice little zone, and then coming back into this area of support. If we take a look at, let me see if I can pull up the US dollar index here. Look at that. Nice upward trend that's been developed, especially if we look at the weekly chart. We've broken out these kind of highs here. What's interesting, though, is it still hasn't kind of taken out this high, that sort of 102 level. So is this almost like a false breakout of these recent swing highs here, but not necessarily this zone, right? This zone would have been of big importance. Let's have a quick look at the daily. I just want to see what that looks like on a daily chart. So yeah, I mean, you could probably narrow it down to this sort of area in here. But does that mean that the dollar's going to roll over now? Potentially not. We still need to be a little bit careful here, even though I do think that the dollar is a little bit vulnerable at the moment. If we look at it from a technical perspective, it's still bullish. The market is making higher highs, higher lows. So we need to see that change. If we see price kind of come up, fail, make a new lower high, break into lower lows, great. That's when we can be kind of definitive that the US dollar is starting to lose a little bit of its momentum at the moment. So keep an eye on this. I think that we are going to see maybe one more bounce in the US dollar. Maybe it is going to come back down into this sort of area around about that 100 spot 30. The likes of dollar Swiss long, things like that might just continue in the meantime. But, keep an eye on this. I do like dollar downside. I mean, I am still sure dollar yen right now. It was looking pretty good, but we've had a couple of sort of rejections in and around these lows here at the moment. So I want to see if momentum can take us through. I still like the idea of potentially looking for this downside into at least the 160, perhaps even into the 159 handle. So let's move on. The last thing that I wanted to talk about today was, let me just move this on here. The last thing I did want to talk about was, how to identify moves or how to identify smart money moves, right? Now, when I say smart money, a lot of people think that it's that smart money concepts where you kind of draw, fair value gaps and all this kind of stuff. I'm not talking about that. I'm talking about real institutional hedge funds pushing in money into the markets. Now, hedge funds can't just push billions into the market at once because they need to hide those orders. Otherwise, it's not a fair market. So they have to dip their orders through or have to drip feed their orders through. And they do that in multiple different ways. But the Commitment of Traders report is one thing that I love to use because it gives us an idea of what smart money is doing. Are they increasing their contracts? Are they decreasing their contracts? What is the key source? Now, we actually spoke about a commitment of traders report signal recently, which was the Japanese yen as well. So the Japanese yen, obviously, super weak currency. The market has been pushing lower and lower and lower. But what we saw in the contracts was the contracts were getting extreme levels, right? So I like to look at what the hedge funds are doing. Are they reaching extremes? Where are those extremes coming in? I like to look at what the commercials are doing as well, because they are essentially the most informed player in the game. Reason being is because they've got to hedge their future prices, because if they don't, then profits could be halved, right? They could have a real impact on their savings and whatnot. So commercials really are a big player in the game. Now, looking at this chart on Japanese yen, so this is the inverse of the dollar yen chart. You can see that price has been down for so long, right? And now we're coming into strong levels of support. So even from a technical point of view, you could say market is coming into a level of support. But if you knew that hedge funds were reaching extreme positioning, then it just basically means that there is an opportunity that this trade is now crowded and that people are going to be looking to get out of this position. So that's what I'm waiting for on dollar yen. Now, usually around this 162 level as well is where we start to see intervention coming in. So this is how you can start thinking about how smart money works. It's almost like, well, we've got a BOJ hiking interest rates. We've got a potential for potential for intervention coming into the markets. And we also have hedge funds at an extreme short position on the Japanese yen, which can unwind very quickly on any kind of news. So I'm looking at this as we've got an extreme position coming into the markets. I like the idea of being a buyer of the Japanese yen. And that is also reflected in the currency strength meter here, because I'm looking at things like Kiwi yen short, Aussie yen short, and potentially Swiss yen short. So if we went to Aussie yen, and I did talk about this earlier in the week in one of our blog posts, I said dollar yen is at 162, but my most favored chart to trade is Aussie yen. And the reason for that is because this price is actually starting to show a downward trend forming. If we look at this daily price action here, we can see kind of topped out at that kind of 114.50, broke through this trend line support in here, and the market made new lows, came up, failed to kind of reach back up to the highs, market broke down. And now look, we're getting lower highs and lower lows. So there's a good possibility that Aussie yen could continue to push to the downside here. And it's just more technically sound than dollar yen. Now, I did take the dollar yen short because of the fact that it was at 162. But really speaking, I could have got short in on here as well. We could have looked at this area here as being a level of resistance, looked at the 4-hour chart, see how the 4-hour chart reacted, came up really strong candlestick, rejection of an inside candlestick in there. If you look at the hourly chart, you can see the market formed a nice sort of double top pattern, broke through that neckline, and then continued to sort of roll over. So looking for shorts around that area would have been a good idea, but also looking at maybe breaks at the 50 moving average would have been nice, targeting down into this key area of support. So when you're looking at trying to trade with smart money, I would always say look at the extremes, look at the crowded area, then look for opportunities around that. So, crowded trade was Japanese yen short. So I'm going to look to do the opposite of that. I'm going to look to buy yen. Where should I go and place that buy? Against weaker currencies, okay? Because it just makes sense to do that. So keep an eye on that in the future. I'm going to call it quits there. Thank you for watching the Markets in 3 today. I'm your host, John. I'm here to bring you the latest in FX, charts, macro, all that kind of good stuff. So please subscribe if you enjoyed it. Leave a like. And if you want to leave a question, drop a comment down below, and I'll speak to you soon.